want to start with that Trump tweet and his threats when it comes to currencies. What are the chances that the trade tensions between the U.S. and China evolve, or maybe I should say devolve, into a currency war? And who is most likely to weaponize their currency first in that scenario? Is it the U.S. or China?
Well, yeah. Well, the currency weapon has been on the table for a long time, and as you know, the Chinese have used that weapon. It's interesting that maybe in preparation for this recent meeting, the Chinese allowed their currency to get stronger against the U.S. dollar. That sort of, I think, eased tensions somewhat. But the U.S. is in a very difficult position because the U.S. dollar is not a U.S. currency, it's a global currency. So there's very little the U.S., particularly the fact that the foreign reserves of the U.S. government are not that great. So very difficult for them to do anything about the currency. And of course, other countries can control their currencies. China controls the currencies very closely. The Europeans can do it. Other countries can do it. So I think the only thing the U.S. can do is jawbone the other countries into easing up on their weakening of their currencies.
Mark, good morning to you. It's Manis in Dubai. If I look at the context of what's going on in markets, some people are sort of saying we're hitting slightly irrationally exuberant times. What would you say from the EM perspective? Is it underpricing escalation of trade angst between China and the United States of America?
I don't think it's underpricing. I think it's out there. The risk is out there. Everybody's aware of it. I just returned from a 5-city tour of the U.S. Everybody we talked to asked about the China-U.S. trade war. So they're very aware of it. But there are other factors that are overwhelming on the positive side, and that is interest rates. Interest rates are so low. As you know, in Europe, it's negative. And they're going down in emerging markets, which is very good. And as you know, lower interest rates in the U.S. helps emerging markets a lot. So I think that's really what's driving the situation. And also, don't forget, liquidity is increasing. A lot of people have overlooked the impact of cryptocurrencies. I believe the increase in cryptocurrencies means there's an increase in global liquidity, which cannot easily be measured.
So you are, of course, an emerging market expert, Mark. I'm curious, there's been a chorus of people who are talking about how developed markets are starting to resemble EM a little bit more. I remember after Trump was elected, for instance, we had S&P, Standard & Poor's basically saying that they were no longer able to separate DM economies from EM based on the strength of institutions. Is that something that you are watching or something that you would agree with?
Oh, yes, it's a very difficult problem. I mean, just think about it. Alibaba, where's it listed? It's a huge company listed in the U.S. Is it an emerging market company or not? So these are the issues that are really very difficult to untangle. But the reality is that if you separate the countries, the emerging market countries and the developed market countries, of what we normally think of China, India, South Africa, Brazil, those countries, they are growing at double the rate of the developed market countries. So the argument for emerging markets is still out there, but now it's even becoming more salient because there are so many people that have gone into ETFs. So everybody's sort of indexed. They're tied to the index, to the big stocks. And they're asking, hey, maybe I'm taking too much risk of being with this crowd that's in the big stocks. Maybe I should go into a more actively managed fund or an emerging market fund, which will give me diversification. So I think that's what's happening now.
Where are the most crowded trades then? If you say that the ETFs are crowded, we've seen a flow of foreign money back into China recently. We've seen various runs higher in terms of EM credit and EM stocks. So is it the stock side or the credit side that's the most crowded and perhaps causing you the most concern?
I think the credit side has got problems with lower interest rates. Of course, people holding higher rate notes are going to be doing well, but others who are trying to get in are going to have problems, which is why I believe you're going to see a movement into emerging market bonds, because people will be able to get better interest rates. Just think about a European sitting with negative interest rates. Where do they go? The only place to go is either stocks that are paying dividends and emerging market bonds. So I think this is where you're going to see a movement.
So, Mark, just going back to the trade risk, I understand that you like emerging market assets due to the higher growth potential there, but it does feel like there is this potential for a lot of EM to become suddenly politicized in various ways. So, for instance, we saw Marco Rubio writing to MSCI complaining about Chinese equities being in its benchmark indices. We've seen the U.S. impose some additional tariffs on steel going through Vietnam, which is a country that you've been bullish on for quite some time. Are you worried at all about emerging markets becoming politicized in this way when it comes to financial flows?
Definitely, we have to keep track of that, and Vietnam is a very good case in point. The Vietnamese government was aware of Chinese shipping through Vietnam to get around the U.S. tariffs. And I believe they're well aware and they accept the fact that the U.S. had to take action. But there are many, many other products that Vietnam can produce that will go into the U.S. with no problems. And this is true of other countries like Bangladesh. I believe India will definitely benefit from this trend, although that will take more time. But I think, yes, the politicization of trade is very much with us. And it's going to have to be bilateral trade agreements between these various countries, particularly between the U.S. and the various other countries around the world.